May profits be upon you. How you doing? Let's get through Euro USD. Let's take a good look and see what we got coming this week. Let's set up some POIs. Now, let me give you my observations. One, I need a pointer, a proper pointer. Let's see. All right. Yeah. I didn't need an arrow. All right, whatever. Okay, so what do we have here? I'm looking at this impulse to the downside. All right, we broke structures to the downside. That makes this market bearish at this point, right? All right, we pause here, and it looks like we have this pullback, a swing low, swing high, and then we break the lows. We take the liquidity from this low, all right? That gives us a change of character when we break this high. We broke that high here, all right? We broke this structural high here to the upside. That makes this market bullish at this point. We've shifted from a bearish momentum to a bullish momentum, right? Got to pull back and then up, all right? We break this high and we are still bullish at this point, all right? And then we break the higher low that is responsible for this high to the downside. This market is now turned bearish. Are you with me so far? Good. We formed bearish, we formed supply, all right? And we're down into the demand zone that was left here from this impulse, this originating impulse. Do you see what I see? We have a break of structure and then a return to impulse, just like the textbook says, right? Good. So we're down at the demand and we impulse to the upside, pull back into supply. Boom. Should this supply hold is the question. Well, we broke structure to the downside. I'm going to say yes. Yes, it should. That should be a strong high because we broke structure to the downside. And what do you know? It does hold. All right. We make a swing low and then a swing high. All right. Not breaking this high, not taking any liquidity from up high. And then we break structure to the downside. We break the higher low that was responsible for this high. Right. We are now bearish in this market on this time frame. This is a monthly. This is the monthly. So just bear that in mind. We are bearish on this monthly time frame. All right, the momentum is bearish. Now let's go to the weekly. Take a look at this price action. All right, we see the breaks. We see that how price took its time getting down here, right? Gave us this change of character here where we break this low. Let me write it. We break this low and then we make this high here. We'll break the low, boom. And then we break the high. That is a change of character. That's just letting us know that price wants to go from bearish to bullish, right? Side note. Okay. So here we are. Price is bullish here. Swing low, swing high. The supply is holding. We break structure to the downside after we break that low, which was responsible for this high. This is the higher low that is responsible for the higher high. We're down here now. We've found some a demand zone. Do I think this demand zone will hold? No, I think it's pretty weak. All right. One of the ways I look at that is, if I can do this. One of the ways I look at that is, and I don't like that. Let's just go in here. All right. You see how far into this demand zone price went? This is a mitigation. This is the first mitigation. There's a second mitigation. There's no more orders. There's no more orders in here. This thing is going to give way. But what we want to record in our minds, what we want to make note of is the response, the reaction to the zone. You see, how high it went. Now, this, like I told you in the Dixie, the US dollar index video that I just put out prior to this one. All right, go check it out. I'm gonna leave a link. At the end of this video, I'll leave a link for you to go check it out. All right, you see this? You see this? This is a bearish engulfer. This is forming a bearish order block. All right, I'd like to see it break the previous low. All right, we have engulfed this the body of this bullish candle. All right, I would like to see some follow through with it. Why? Why? Because there's liquidity down here, and that would mean a strong dollar. That would mean a strong dollar against a weaker euro. Got it? All right. So that would make sense to me. All right, that price would continue bearishly. But what you want to make note of is who's in control. Is it the bears or the bulls? Right now, bears are in control. Bears are in control. Why? Because we are breaking down. Where the momentum is down, and we don't see bearish order blocks. We don't see supply being violated by demand. All right. This has the potential for a flip zone. All right. But this is a weak zone. This is a weak demand zone. And I believe we're going to plow right through this. Hello, let me give you a visual. I think we're going to plow right through that. All right. And take out this sell side liquidity here. Okay. Let's go to the daily. All right. This is what we come on with that. This is what we're looking at. All right. Chop, chop, chop. This is where we've been, man, for the longest, since freaking, excuse me, November 2021. All right. Chop, 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 chop. All right. We finally get a breakout to the upside. Everybody and their mother was telling me, yep, we're going up. Euro's on the way up. Euro, USD, we're going bullish. You know why I didn't think it was bullish? You know why I stuck with a bearish bias? Was because if you measure, like I did in the previous video, just go check it out. All right, the previous video, if you measure with a Fibonacci retracement tool, you will see we're right at the golden ratio. Price went right to the 618 Fibonacci retracement level, the golden ratio. All right, and started to become bearish again. All right, my bias was always in that direction. All right, even when it started pulling up, I'm thinking, what is the expectational order flow? All right, we see that we have a break of a swing high, a break of this higher low here, and price is bearish, and my expectation is for price to make this lower low, like it did here, makes this lower low, pull back for a lower high, and then continue lower. Look what the traffic is like beyond this low. Smooth traffic. We break that low, we're coming down here. Yeah. So that's my expectation because of what the higher time frame is giving me. Lower lows, lower high, lower low, lower high, lower low, lower high. A good pullback to the 618 Fibonacci retracement, golden ratio. It's above the 50% of this trading range. This swing high to swing low. Divide that in half. This is above this. We've hit the discount area. That's all I want. I need that to be in the discount area for me to think of taking a short at a discount. Anything below that 50% area here is premium pricing, and I don't want to pay premium prices, right? So let's go to the 4-hour and we'll wrap it up here. All right, so what are my expectations now at this level? What I'm going to look for is violations. All right, you see that dotted line here? All right, that dotted line comes from the daily, because what I want to look for is liquidity grabs. All right, you see how price had this institutional candle here, only Only institutions can come up with the money to make that kind of move. All right. They're bringing it down here for a purpose. That is a very deliberate move here. All right. Price pulled back and then we pull down lower. This is an inside candle. All right. A lot of times it'll signal a continuation. Sometimes it'll indicate that price may be about to reverse. We broke that low. We broke that low to the downside, and then we took the liquidity, and then we broke lower. That's what I'm saying, man. Took the liquidity, and then we're going lower. Now, the day last Friday closed bullishly, all right, but we didn't break that high. We did not break that high. That's something to be mindful of. And we have on the 4 hour, an area of a zone of supply here that price came back into to mitigate, mitigating right at the 50% mark. I'm expecting, but not married to the bias, but I am expecting price to work its way down. We had a break of structure. We had a return to impulse. I'm looking for price to at least target these lows right here. At the very least, I'm looking for more down to the demand. That's what I'm looking for, because demand is not in control here. Supply is. Supply is in control. All right, so that's where I'm at. I hope you found this video quicker and easy to consume. And I hope you'll check out the previous video where I discuss the US dollar index in a little bit more detail, a little bit longer, because it kind of is the bellwether for the other major pairs. Okay, I will see you in the next video, and trade safely.